Hi everyone, this is Randy Pickerell, your informative loan officer, and I'm here today to talk about supplemental property tax bills. So if you have purchased your property in the last 6 to 12 months and you've not received a copy of your supplemental property tax bill in the mail, then you should continue watching this video to understand what they are and about how much they're going to cost you. Keep on watching. So the first thing you'll want to do is go to a search engine and put in an entry and search the county that you bought your property in my case, Alameda County. So Alameda County supplemental property taxes is what I searched. And the things that came up that I'm going to use are this property tax lookup, which I'll use in a few minutes, and information about supplemental assessments from Alameda County Assessor. So once I clicked this link, it took me to this page right here. And you can't really see much on this page until you scroll down, and it gives you information about supplemental assessments and this supplemental tax estimator, which is key. So it tells you that when the assessor's office reappraises your property, and really they mean reassesses your property, due to a change in ownership, you will be notified by mail of the new assessed value. This notification is known as a notice of supplemental assessment. If the new value is greater than the taxable value on the roll, and what they're talking about is the seller's taxable value that they were paying, the supplemental assessment will result in a bill. The supplemental tax bill is issued only on the added value, and unlike a regular tax bill which covers the entire fiscal year, the supplemental bill is prorated to cover the period from the date of the change of ownership or completion of new construction to the end of the fiscal year. It's important to understand the supplemental tax bills are in addition to the regular annual tax bill that has already been mailed out. It doesn't say that, but that would be the case. And as required by law, are mailed directly to the owner of the property. Unlike the annual property tax bills that are mailed in October, lenders do not receive the supplemental tax bill. These bills are the responsibility of the owner, even if the regular annual property taxes are normally paid by a lender through an impound account. Now, if you have an impound account, it's likely that your existing lender has the money to pay the supplemental tax bill in the impound account. So you would definitely want to contact them and present them with a copy of that bill and find out if they do. Now, depending on when this happens, it's possible they don't have enough money in it. When they start out the impound account, they are collecting on the full purchase price at your property tax rate. But sometimes it takes the county so long to get the supplemental bill that lenders actually will refund you money from your impound account because they think they have too much money in there. And by law, they have to do this annual accounting of that. And if they have too much or too little, they have to adjust your account either by sending you a refund or asking you for more money. So if they've done that and you might have forgotten about that, they probably don't have the money to pay the supplemental bill, and it will be your responsibility. But if they haven't refunded any money to you out of your impound account at any point, then they likely do have enough money in them. And you want to contact them by looking at the statement that you get in the mail each month. There's a customer service phone number on there, and you want to contact them and ask them about this. But getting back to the purpose of this video, Supplemental Tax Assessor. This is a great tool for you to estimate how much the amount is going to be. So once I click this click here button, this is the landing page. And again, great information up here to read through so you'll understand how this works. I'm not going to do that now in this video. But what you need to do is put in the purchase date of when you bought the property and closed escrow and the price that you paid for the property. So once I put in those two items, this is what came up. So this computation wasn't done yet, but it did have the purchase date that I plugged in, and you can see I put in October 8th, 2022, and a purchase price. I put in $1.5 million for the purchase price. Now, the thing that wasn't filled in here was this find roll value or minus roll value. So this is what my property tax assessed value is right now on my property, $425,426. How do I know that? Well, I went back to here. This is my original search, and I clicked property tax lookup. And once I did that, let's see, I'm going to have to go back there so you can see what that looks like. This is what showed up. Search, secure, supplemental, and prior year delinquent property taxes. So the first search box was search by parcel number. Most people are not going to know what their parcel number is, and you probably don't. Your second option is to put in the purchase address, the property address, I should say. So I put in, for Alameda County, you have to enter the street number and the street name and the street type all separately, no unit number, and then I clicked the drop down, and Pleasanton was the city I selected. Then I clicked search, and once I clicked search, my actual property tax bill was downloaded to my computer, and I opened it up, and this is what it looks like. So the purpose of this is so I could look at what the assessed value was before I bought my property. So right in here, this tax computation worksheet, this is where it shows you the assessed value of your property. So you can see my land was assessed by the county this year to be worth $200,197. The improvements, which means the house on top of the land, was worth $232,229 for a total taxable value of $432,426. Because I live in the property, it's not a rental, I get the $7,000 homeowner's exemption that took my roll value from $432,426 down to $425,426. So that is my tax roll value, $425,426, and my tax percentage for Pleasanton is applied here, 1.139%. So that tells you how they assessed my property, how they estimated the value, in other words, and what percentage tax rate they applied to it. Now, let's go back to the supplemental tax assessor, and you can see that they put in a 1.2% tax rate. Now, my tax rate is slightly lower than this. This is just an estimator. They don't know exactly what your tax rate is, but they know that it's going to be around 1.2 as the value. So the thing that was not completed when I originally did these first two things, which was the purchase date and the fair market value, or the purchase price, was we didn't know what the roll value was. So that's where I looked at the search secured, found my roll value, which was $425,426, and then I plugged that in there. And then it calculated the difference between my $425,426 roll value and my purchase price of $1,005,000, which is $1,074,574. It applied this 1.2% tax rate to it, and it said, okay, for a full year, that would be a supplemental tax bill of $12,894. Now, I haven't owned the property for a full year because I said I bought it in October, and they're going to charge me from October 22nd, the date I purchased the property, through the beginning of the next period, which is July 1st. So that's a proration factor of 0.67. If you look at this chart up here and you say, okay, if you bought the property in October and you're getting an assessment for a full year, we can't really charge you the full year because you didn't own the property for a full year. You only owned it from October till the beginning of the next tax roll period, which is July 1st. So they're charging me from October 8th, I should say, to July 1st, which is a 0.67 prorated factor. They plugged that in. I didn't. They did that estimate. And the total tax bill for that period of time, again, from October 8th, 2022 to July 1st of 2023 is $8,640. That's going to be the estimated amount of my supplemental taxes. Now, it's going to be slightly lower than that in reality because if you remember, my actual tax rate was a little bit lower, 1.130% versus 1.20%. So there you go. That's how you would estimate what your supplemental tax bill is going to be. If you are confused by this and you would like some help, feel free to give me a call. I can do this for you. Thanks very much. Have a great day.